Welcome everyone to Vested Interest. This is Shane, and this is our weekly portfolio update. We do this every Sunday. We did add $5,001 to the portfolio. Part of that is part of our bonus that we received. I divvied that up partly over last week's investment as well as this week's. So we will cover all of that, all of the options I was in, if there were any dividends I was paid, and all the buys and no sells this week. We did some of that last week, reallocating some funds. But before we get too far in the video, I would like to take the time to thank everyone who has taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. On this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying weekly, which is what I do, or monthly, once a year, quarterly, whatever your investing timeline it is, whatever that is. It could be weekly, bi-weekly, if that's how you get paid, whatever it is, but being consistent with it. I do cover all of my investments into the portfolio on this channel. I do not have a paid Patreon account or another site I'm trying to send you to, or any kind of other website you need to sign up for, anything like that. Everything I do is out in the open. It is free to see what I am doing in my portfolio. But if you would like to help out the channel, if you could do me a big favor, take a couple seconds to hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever I put out any new content. I do this series every Sunday. Again, we cover what I did in my portfolio from the previous week. I also do a stock pick of the day video series Monday through Thursday, where we take a look at a company's stock, run it through my screener, and see if it makes it onto my watch list. There is the thanks button down below for anyone who might want to help out the channel financially. Buy me a cup of tea. There is that option down below. Any money I do make on the channel will be split up 3 ways between my portfolio and my 2 daughters' custodial accounts. I think I'm going to use all of the thanks money for their custodial accounts and any of the advertising money for my account. That's kind of how I'm going to set that up. And let's get into the video now that we've got that out of the way, and share with anyone you think that might find value in the content. That is another one that helps out the channel. And watch time. Watch the videos to the end, or as much of the video as you can. Really do appreciate that. All right, no options. We had a pretty good week last week doing cash secured puts. We tried some covered calls again this week. But as is typical, crazy week up and down. It seems like it started out the week all right, but then towards the end of the week was down again. So options overall this year have not been going very well. I'm very conservative with options. I'm trying to keep the positions in the portfolio, as well as kind of skim out some of the options premium, but that has not been working as well as it did last year and the year before. Dividends, on the other hand, have been pretty good. We had some more dividends this week. We had Occidental paid us on April 15th, $48 total. We do have the drip set on the portfolio, so that just means anytime a company pays out dividends, in this case Occidental, and the $48 it pays, it goes right back in and buys more shares. So 1.25737 more shares of Occidental with that $48 dividend payout. And then the new shares added an additional $1.20 in passive income over the next calendar year. And that is also what's referred to as the dividend snowball, or the compound interest effect, right? So we owned shares of Occidental, and Occidental is ticker OXY out of the energy sector. We owned those shares of Occidental. Those shares that we owned pay out dividends. Those dividends get reinvested, buy more shares, and the new shares add additional capital, right? So that is that dividend snowball growing over time as we add new capital, which we continue to do, as those dividends get paid out, and as companies raise their dividend as well. That all adds to that snowball, and the hill that snowball is rolling down is time. So the longer we do this, the more capital we will build up in that snowball, and the larger it will be. All right, now we get into the first capital. Is actually the last capital invested, but we're going to cover it first. This is the rest of our bonus. Not quite the rest of our bonus. I did put some of my bonus, about a quarter of it, 3/4 of it, we put into the market and paid some bills. But then the rest we put into savings. So we do have a little bit of funds back into savings. I don't really cover my cash positions on this channel, but we always have a little bit of cash in the bank. But we added an additional $2,800, roughly $2,801.86 to be exact, from our bonus into the portfolio. So April 17th, we went in and added this outside of our regular weekly buy. With those funds, we picked up 4 shares of Vale, ticker VALE, is out of the materials sector. This is a mining company. We picked up those 4 shares at $9.08 per share. Added 3 more shares to our Occidental Petroleum position, ticker OXY. This is out of the energy sector. Picked up those 3 shares at $39.65 per share. 4 more shares added to our NextEra Energy position, ticker NEE. Picked up those 4 shares at $66.81. 4 more shares added to our Cisco Corp position, and NextEra Energy is a utility company, if I didn't mention that. SYY, Cisco Corp, we added 4 more shares there. This is out of the consumer staples sector. Picked up those 4 shares at $71.55 per share. 2 more shares to our Procter & Gamble position, ticker PG, again out of the consumer staples sector. Those 2 shares we picked up at $169.73. 4 more shares added to our Owens Corning position, ticker OC. Picked up those 4 shares at $138.44. We added 2 more shares to our Union Pacific position, ticker UNP. Owens Corning was out of the industrial sector. Union Pacific is also out of the industrial sector. And ticker UNP, those 2 shares we picked up at $220.20. 7 more shares added to our Lam Research Corporation position, ticker LRCX. This is out of the information technology sector. 7 shares picked up at $64.67. And 2 more shares added to our Alphabet position, ticker GOOGL. Picked up those 2 shares at $153.42. This $2,801.86. The new shares it picked up added an additional $61.31 in passive income over the next calendar year. Now, this is part of our regular weekly investments. So on the 14th, Monday, whenever we tried to run some options as well, we added $1,091.44. This would have been on Monday. With those funds, we picked up 1 share of Comcast, ticker CMCSA. We picked up that 1 share at $33.81. This is out of the communications sector. Now, we really picked up 3 shares of Procter & Gamble. I don't know why it broke it up. Sometimes it does this. I do market buys, so sometimes they're buying from different sources. So you might see, usually it's whenever I do like 10, 20 shares bought, but for whatever reason, they broke this out and paid a little bit, $168.06, $168.05. Well, we picked up 3 more shares. There's 2 here, there's 1 there. We did the buy at the same time, but it just broke it up for some reason. I think that just, again, is based on my brokerage account buying from other brokerage accounts, and maybe they didn't have enough here. So they picked up 2 from one spot and 1 from another, which is fine. I still got the same 3 shares, and it's only a penny apart, but it's just weird how they break up the buys sometimes. But anyways, I'm going to say 3 shares here, accounting for this 1 down here of Procter & Gamble, ticker PG, out of the consumer staple sector. Picked up those 2 shares at $168.06. Picked up 4 more shares of Lam Research Corporation, ticker LRCX. Those 4 shares we picked up at $68.23. And you should start to see some of the same names here, right? We're adding to positions and really building them out while they're pulled back right now. That is the play, at least for me right now. We've even consolidated and sold out of some positions to do that and further consolidate the portfolio while building out some of these positions we want to. And then last, but certainly not least, on the 14th, which was again Monday, we added 2 more shares to our Owens Corning position, ticker OC. Picked up those 2 shares at $140.28. This $1,091.44. The new shares it picked up added an additional $22.21 in passive income over the next calendar year. All right, and we weren't quite done. We did go back in on on Wednesday, April 16th. We added an additional $1,108.19, which again is a little more than we typically invest, and we are probably going to back off a little bit. It'll probably be around $1,200 to $1,300 going forward. Here, I'm going to try to build back up my cash position. Like I said, I did put some of my bonus back, but also I have been investing more than typical with these crazy markets over the last month, almost 2 months now. So I need to build back up my cash position. So I'm going to back off the investing, still around $1,200 a week, but back off a little bit from the 14, 15, 16, 17, even 1800s I've been adding recently. So this week was no different. We added about $2,100 or $2,200 regular investing plus our $2,800 from our bonus. So we're going to try to build back up that cash position anyway, is what I'm getting at. But with this $1,108.19, we did add 9 shares to our Schwab Strategic Dividend Growth ETF, ticker SCHD. Picked up those 9 shares at $25.43. And this is part of our weekly buys. We're going to add to SCHD and VTI. We're adding around 3 to 4 shares. We've been increasing that a little bit since this one's pulled back quite a bit. VTI is the other one, Vanguard's Total Stock Market ETF, ticker VTI. We added one more share there at $260.58. And then there it is again. We've been adding to this pretty consistently for the last several months now, 2 if not 3 months at least, to our alphabet position anytime it's under 165, and it's been in the 150s, 160s, even down in the 140s at times. So going to continue to build that one out, even though I think there's some more negative news that's going to come out next week that maybe drops this a little bit more, hopefully, and I can pick up a couple more shares. Picked up those 4 shares at $154.67. Passive income added from this $1,108.19, $16.09 from the new shares picked up. Total invested $5,001.49. Total passive income added, the new capital, the bonus money, plus the dividends paid out from Occidental, added $100.81 in passive income over the next calendar year. All right, quick run through the sector weights here. Communications sits at 10.91% of the portfolio. Consumer discretionary, 0. We don't have anything in the consumer discretionary position right now outside of VTI or SCHD, those 2 ETFs. So we are looking for at some point adding something back in here, 1 if not 2 companies. But I am not in a hurry. Tractor Supply looks like one I might be doing, and there's some other ones I've been looking at. But again, with the tariffs, I am very hesitant to buy foreign companies. One of the other ones I was looking at is a foreign company, and I am really Louis Vuitton. It is the company. But again, I am so hesitant to add right now because I don't know what's going on with tariffs, how long they're going to be on, how heavy they're going to be on. Very, very fluid, I'll call it. Chaotic might be a better word. But without knowing what's going on there, I am kind of hesitant to add anything in this sector quite yet, but eventually we will. Consumer staples makes up 9.4% of the portfolio. Energy makes up 10.27. Financials is at 2.23. This is another one I wouldn't mind adding another position. American Express is one I've had my eye on. Visa seems to be a popular one as well, kind of in the same vein as American Express. Even MasterCard I think wouldn't be a bad one. So between those 3, I will probably eventually add one. But again, if we are entering recession, a lot of times it's credit cards that people back off paying. And I think if that happens, then the credit card companies will take a big hit. And I'd like to wait till that happens to add something else. But healthcare makes up 14.56. Industrials at 6.99. Technology is the largest slice of the pie at 17.57. Materials makes up this sliver here at 2.34. Utilities at 8.94%, REITs and real estate at 6.55%, and ETFs at 10.24%. Over here on the right, you can also see the percentages that match up to the pie, as well as the dollar amount allocated across the portfolio to each sector as well. Here it is. This is my portfolio, and this is a real portfolio. These do match. I know it's just a spreadsheet that I show every week, but this does match up with my actual investing account with Ally. I have my brokerage account with Ally. So I just update this out of my Ally account. It makes it easier. And then I adjust the price per share, all of the different numbers from week to week. As companies raise their dividends, I adjust that as well. And I show this every week because I think it's important for those of us talking about finances in this space to show what we are really doing so people can see the actual results of what we are doing as well, right? Whether I'm up or down, I'm going to show you. Whether I'm buying, whether I'm selling, reallocating, I'm going to show you that as well, because those are things that happen in a real portfolio. Warren Buffett doesn't hold all the same positions all the time. He buys and sells. I mean, I've seen him buy stocks and then the next quarter sell. For example, one is Taiwan Semiconductor. I know he bought that, and then about a quarter later, he sold out of it. United Health, I believe, was another one. Or not United Health, maybe it was Ulta Beauty. Ulta Beauty was another one he bought, and then I think it was about a quarter later he sold. So those things happen in real portfolios by some of the best investors in the world. So if you think you're not going to have buys and sells in the portfolio or losses that you sell, you are wrong. It's going to happen at some point in your portfolio. Embrace it, learn from it, and move on. That's the thing. Make adjustments whenever you absolutely need to. Sometimes there's better opportunities. Even the best stocks lose favor at times, or the company goes through downturns and hardships. That's normal. So I want people to see a real portfolio built out over time, the ups and downs associated with it, and hopefully it gives you the confidence to go out there and build your own portfolio, because that's why I call this channel Vested Interest. It is in your vested interest. It is up to you to secure your financial security and your financial future. No one else is going to do it for you. And if you are counting on someone else to do it for you, that includes the government, you are probably going to be in a bad spot later in life whenever no one has done it for you and you're just sitting there without that financial security or that portfolio to fall back on. That's why I do this. Hopefully this helps some of you out there. I am not a financial guru. I did not go to college for this. I am not in finances. That's not what I do for a living, though I do, part of my job is watching projects. So I do manage budgets, that sort of thing. Millions, multi-million dollars is my budget for the year. And I have multiple projects that I manage and make sure the accounting is good. But that is not what I went to school for, right? I use some of these same type of spreadsheets for those projects so I can track costs. And if I can do it, and if I can learn to do it, you can too. That's what I'm getting at. I do have a bachelor's degree, but my bachelor's degree is in occupational safety and health. Again, it is not in finances. I did not come from a wealthy family. Neither one of my parents even graduated high school, if that gives you an idea of some of my background. My dad was a construction worker, a mason, a brick and block layer, and my mom worked, miscellaneous jobs most of her life. Sometimes a lot of them were cleaning jobs for folks. So didn't come from a wealthy family, didn't come from this type of background, learning as I go. So I want to show you that you can do it too. And if you want a good laugh, I grew up in Mayville, Michigan, really small village. They call it a village. They don't even call it a town. I think there's about 3,000 people in the whole village, so it's not very big. So that's why I do this. I know it's not something that schools really cover, and maybe it should be, in my opinion, but hopefully you are getting something out of this. You are learning from the mistakes I make, and again, it gives some of you out there the confidence and the ambition that you can do it too. And it doesn't have to be the amounts that I put in. If you can afford $100 a month, $50 a week, $20 a week, whatever it is, eventually small amounts turn into large amounts depending on how long you invest, right? Time is your best friend in investing, and time is going to pass anyway. So you might as well let it work for you. But anyways, I'm going to get off that soapbox. Hopefully this helps some of you out there. And hopefully it gives some of you the confidence that you can do this too. You don't need to pay someone to invest for you. You can get in the markets. It's a lot easier than 20 years ago, where you had to pay for each trade, and you had to go through a brokerage account that you couldn't really invest in without somebody. It's not like that anymore. We've got the Weebles out there you can do online on your phone. We've got the Robin Hoods, the Moo accounts. I mean, there's so many different brokerage accounts. SoFi, different brokerage accounts right now that don't charge you any fees like they used to, and don't require you going through some sort of investing guru, so to speak. You can do it yourself and not pay that fee. All right. The ticker is in this. This is each individual position in the portfolio here. Total shares as of the close of business. And all of these numbers will be as of the close of business last Friday. Current price, again, as of the close of business, and really not on Friday, on Thursday, since the market was not open on Good Friday. Market value here. Average cost per share. This does include reinvested dividends. Same thing with purchase price. This does include reinvested dividends. I adjust this as the dividends get paid out and the average cost per share increases or decreases as I add to the position. Total return here, again, does include reinvested dividends. Percent return, whether I'm up or down, I'm going to show it. I want you to see, again, a real portfolio built out over time. You can see there's still a lot of red in the portfolio, but there's also a lot of green. That's the nature of investing. Some positions are going to be up at different times. And the market goes up and down. Individual positions go up and down. It's the nature of investing. I think Warren Buffett famously said, if you can't handle a 50% loss in a stock, you shouldn't be investing in the market. Now, that doesn't mean if a company's fundamentals change, right, and the stock goes down because there's something wrong with the company, you shouldn't sell, because you should. You should be re-evaluating the companies that you hold. Recently, I sold out of several positions. And that's the reason. I reevaluated the positions. Their revenue was continuing to decline. Their margins were continuing to decrease. And with tariffs, it just seemed like not the right time to hold those type of companies, and reallocated funds across positions I thought were better suited for long-term gains, which is what I'm looking for. What sector the companies fall in, whether it's a quarterly, monthly, semi-annual payer. Let's stop here for a second. You can see the yellow. That just means that a company's dividend has been raised for the year. So I want to track that as well. What companies have raised their dividends? And we did have a couple that just announced. Johnson & Johnson, I believe, was one of them, raised its dividend this past week or this past couple weeks. And Procter & Gamble, I believe, was the other one that raised its dividend. I'm almost positive it was Johnson & Johnson, but I'm pretty sure the other one was Procter & Gamble that just raised its dividend. So about half the positions so far have already raised their dividend for the year. Still waiting for a couple. American Waterworks here, CVS, Google. Obviously, we haven't seen what their first dividend raise is going to be. They just started paying a dividend about a year ago. Kroger hasn't raised their dividend. Man, they've really shot up. I wanted to add to this one, but man, it's really shot up. Lamb Research hasn't raised their dividend yet. OHI, I am actually not anticipating a dividend raise. They haven't for quite a few years. I wouldn't be surprised if they don't. Ally, I'd like to start them raising their dividend again, but same thing. They paused their dividend a couple years ago, so who knows if they're going to raise it again. SYY, they haven't raised theirs yet. AT&T, I bought them a couple years ago after they had cut their dividends, so I was under the impression it would probably be 3, 4, maybe even 5 years as they get their debt under control before they start raising their dividend again. So I wouldn't be surprised if they don't. Union Pacific, waiting on that one. And a couple other ones, Vici as well as Verizon, haven't seen their dividend raises yet. But usually a lot of these are around the June, July, August timeframe when they raise their dividends. So I'm anticipating it over the next quarter or so. We'll start to see some of these other ones fill out. Current dividend yield in this column, yield on cost here, portfolio weighting. So what we saw on the previous slide was sector weightings. This is each individual positions. And I do have a rule in the portfolio. I do not want any one position to be more than 10% of the portfolio. I don't want any one sector to be more than 20 to 25% of the portfolio. Estimated annual income here, payout months here, dividend growth year over year, and where the company sits at 15% of a 52-week low. I think I've beat this up enough. If you don't understand that, ask me in the comment section down below. I'll try to explain it to you, but I've said it in almost every video, so hopefully you get it by now. So total shares, currently 7,358.714 shares total. Market value is $344,706.60. Purchase price, I do have $331,059.38 into the portfolio. Total return is up slightly, $13,647.23. Percent return up 4.12%. Sector that they, or I'm sorry, yield on cost 3.702%. I'm sorry, current yield 3.702%. My yield on cost slightly higher at 3.855%. And I don't really focus on these numbers here. I focus on this number here. That's why it's circled in red. The estimated annual income from the dividends paid out from all the different positions in the portfolio. And I would like to say it continues to grow week over week, month over month. But as you saw here, if you've been watching for the last month or so, I have sold out of some positions, reallocated funds. So this has dropped back a little bit. At one point, actually a couple different times, we've hit 13,000. And then because of those reallocations, this has dropped back a little bit, but we are back on the upswing from last week's drop, back up about $100. So at $12,762.69, and this should, going forward, continue to increase week over week, month over month, quarter over quarter, year over year, and we are back chasing that elusive 13,000 a year in estimated annual income. I think we will get there. Definitely not in April, but probably by the end of May. If not the end of May, right in the first week or two of June, definitely we'll be back over 13,000 and then back trying to get to 14,000 from there. Dividend growth year over year at 5.76%. Again, I did just recently adjust this, so that adjusted a little bit. I think it was 5.66%, up a little bit, but we haven't seen the rest of the payout increases, so we'll wait and see that. I'm expecting Google, I would like Google to be double-digit dividend raises, something like Lamb Research, around 10 to 15% is what I'm expecting and anticipating. That will help the overall dividend growth. If that's the case, we'll see. All right, that is really it for this one. Let me know what's going on in your portfolio. What are you buying? Are you selling anything? What options are you in? What dividends were you paid out this past week or in April in general? Would love to hear from you in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the stock pick of the day video series, for example, drop it in the comment section down below. I'll work it into the rotation. Or if you have a question about my portfolio positions I hold, anything like that, drop that down in the comment section below and I'll try to get back to you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a happy Easter, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing during educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. And if you've made it this far, go ahead and hit that like button down below. Share with anyone you think might find value in the content. Make sure you drop a comment and hit that subscribe button on your way out the door, as well as the notification bell. Really appreciate you. We'll see you in the next one.